Hey everyone, Value Add Mike here today to discuss what happened in quarter one and our goals for quarter two. For those who don't know, my name is Mike Taravella, Value Add Mike, and me and my business partner manage over $80 million in commercial real estate, specifically in the multifamily sector. And today I really wanted to go deep dive into what we saw quarter one in terms of deal flow, in terms of operations, and then more importantly, our plans for Q2 and beyond. So Q1, in terms of deals, we anticipated a lot of deals kicking off at the end of National Multifamily Housing Council in January, and we did see an uptick in January, but the problem was it wasn't very sustaining as it went on to Q2 at the end of Q1. So there was an uptick, and my analyst and I have reviewed over 122 deals and submitted 24 LOIs. We had a couple LOIs accepted, but none of them got to contract, and that's primarily because of it's tough to say, but there was a lot of sellers that were eager to sell, but upon further review, there was a tax situation, there was seller financing we were negotiating, and there's just a lot of nuance that sellers just kind of got hung up on. And so we're anticipating as quarter two happens, the Wall Street Journal Prime, which is primarily how community banks determine their interest rates, are now 8%. I think a lot of people are really gut checking to see is now a good time to sell. The people we saw who wanted to sell in Q1 were the people who want to retire or they're starting to become concerned of their distressed assets. So it's just super important that you stay top of mind. And us as operators, we're continuing to follow up. Internally, we made a note to just constantly review, check rental rates, check the debt terms, and see if we can do something creative. Being creative is not our first at bat per se, because every seller has a different option and what they want, and brokers may not like that option. So we're getting more creative with how we approach deals, but also most importantly, we're following up. In terms of Q1, in terms of operationally, I had one of our properties was our 36 unit in Tennessee. We had to go heavy into the management, and as asset manager, we had to really just take over day-to-day operations from our property manager. To start the year, we thought we had marketing issues because 8 of the units were vacant. However, upon further review, we realized the turn quality was not there. So as the asset manager, just handling the day-to-day to make sure renovations are getting done. In terms of resident relations, I was going out, meeting with our residents, making sure their concerns were getting taken care of, but also being a face and to our residents and being responsive. We saw just the communication dwindled between our management company to end last year going into this year. And so I went from just introducing myself to every resident, making sure their voice was concerned, they felt safe. And there was just a lot of missed work orders done. Work orders weren't getting completed. There's promises not being delivered. And I, as the owner, take full ownership of it. And we just went really boots on the ground and handled all of them and just voiced to the residents that we're here for them because we take this very seriously. These are our home. This is a home for our residents. And so to start the year, we were 80% occupied with 5 residents not paying. And today we're 92% leased. And this is the beginning of April, 92% leased, 97% pre-leased, with all but 1 resident not paying, and they're paying by the next day. So I think the biggest lesson that we learned operationally is trust but verify. And I know a lot of people say that and they work about scaling and growing, but I think operationally we want to see video turns of all the units before we pay bills. So that way we can anticipate any punch list items are knocked out. We have the cleaners taking pictures and videos to just making sure we're documenting every process. But more importantly, in terms of marketing, we're getting walkthroughs of all those units that we can share to our prospective residents. And then also too, operationally in other markets, we've seen just marketing has become a huge focus point because 6 months to a year ago is very easy because demand was so high in a lot of our markets. But now we have to do more boots on the ground work in terms of marketing. So we're looking towards hiring a virtual leasing agent to help just add an extra buffer in terms of Facebook Marketplace, being very responsive to our residents, and even on weekends, right? There's a lot of opportunity and options that happen over the weekend that our current property managers weren't doing sometimes. So we just want to make sure that we're always on top of mind on the channel and making sure we're operationally just moving the needle forward. We're looking into some AIs and some text messages campaigns to just help automate that, which there are out there, but it's just more of what is people want to talk to people at the end of the day. So that's why we're focusing on a virtual leasing person to help supplement our property manager's efforts. So a lot of operational headaches in Q1, minimal deal flow going into Q2. What do I expect going on in Q2? I think Q2 interest rates are higher. I don't think, the world is not ending with the Wall Street Journal Prime being at 8. Community banks are asking, I've heard from certificate of deposits. I've heard, with this 4 deals we got under LOI, but not under contract. We're just really focusing on following up with our current pipeline, but most importantly, staying on top of brokers. I think many people in the industry focus off market campaigns, which are great and can be fruitful, but when I'm focusing on my efforts, I know brokers are putting in the effort, calling owners all the time. So I want to be their ally and making sure that we have an off-market campaign that's leveraging brokers to have very specific targets. Now, of course, you can go in with this off-market strategy and go, I want everything 20 to 50 units in these areas. But we're just really going head first, and with our analysts going to be focusing on potential property managers or vendors or just areas where we've noticed a mismatch in leases and see if we can operate a little bit better, because we'll have better property management, we'll have a leasing person, and so on and so forth. So we just want to be more focused and just rely on our brokers to continue to give us deal flow. Yes, the landscape of what an on-market deal is has changed a little bit because brokers are being more selective on who they release deals to, but brokers at the end of the day are calling hundreds of owners per day, and I'd rather be their ally than their enemy. So to kind of wrap it up, I still think very positively of the multifamily front. I think it's just we have to focus on more operations than we've ever had before. And I think those who operate and rely on brokers to give them deals will still be fruitful. I just think it's different than what it is a year ago in terms of rates. So, and also getting more creative with your banks and or seller financing to get more opportunities. So if this video gave you any value, please like, comment, subscribe, share with a friend, and please sign up for our investor newsletter for all upcoming education opportunities, but most importantly, our deal flow. And until then, we'll see you next time.